Hello students, welcome to Drishti IAS. My name is Saloni Nandkyoliar, and in this session we are going to analyze the current depreciation of rupee. We will understand the reasons behind this depreciation and we'll also talk about its implications on everyone. Now this is a very important topic for your GS paper 3, so we are going to cover this in detail. So what's happening right now? Rupee has hit its record low. For the very first time, it has crossed the 90 mark. Now, $1 is equal to 90.13 rupees. Rupee for the first time has crossed the 90 mark, and this huge depreciation now makes our currency one of the worst performing currencies in Asia. Our currency has become one of the worst performing currencies in Asia. And now this is definitely not a good sign for our economy, and there are several factors that have led to this depreciation. And this depreciation also did not happen overnight. So throughout the year, depreciation was happening. We saw a 5% depreciation in our currency in the complete year, and now this has hit its record low. So we are going to analyze the reasons behind this depreciation. Now there are many reasons, but one of the most important reasons over here is that our foreign investors are losing their confidence in the Indian markets, and there has been a record FPI withdrawal, foreign portfolio investment withdrawal. There has been a huge withdrawal from the Indian markets. In fact, if I give you some figures over here, then this year some $17 billion were pulled out of the Indian markets. So these foreign portfolio investors are not feeling confident, are not feeling safe in keeping their money invested in the Indian market, and that is why they pulled out their money. And when they pulled out their money, dollars became scarce. And whenever something becomes scarce, its value increases. Rupee in the comparison of dollar became abundant and the value decreases. So there's a depreciation of rupee in comparison to dollars because the foreign portfolio investors are pulling out their money from the Indian markets. And one of the possible reasons behind this move of these investors is the huge uncertainty that has come in along with the US tariffs. We know that Indian commodities face a tariff from the US markets. Now the problem here is that till now we have not been able to close a trade deal. We are negotiating a trade deal with the USA, but so far we have not been able to close a trade deal. And currently also we have a 50% of tariff from the US. So this is a concerning situation. There is a lot of uncertainty around this, and investors do not like uncertainty. They want to keep their money safe. That is why they have taken their money out of the Indian markets, because there's a lot of uncertainty, there's a lot of unpredictability that is associated with the Indian markets at the moment. Because the trade deal has not been negotiated so far, we do not know what is going to happen to the tariff rates in the future. So this is one possible reason. Then secondly, these investors, they are getting better returns elsewhere. Naturally, the investors are going to be drawn towards more attractive returns. So they're getting better return elsewhere, better returns in the other stable economies, predictable economies, or more certain economies. So naturally, they're going to withdraw their money from uncertain economies and they're going to place it in the more stable and certain economies. That is what these investors are also doing, because they are getting more attractive returns elsewhere. And globally also, now not just in the Indian market, but globally also, the US dollar has strengthened. There is a global strengthening of US dollars. So it has been performing good in almost every market. There is a global strengthening of US dollars. Rupee has not been performing that good. So naturally, there is going to be a relative difference over here. And because of this also, we see that our rupee has depreciated in performance in comparison to the dollars. So there are a lot of reasons behind this depreciation that we just discussed. And because this is a record depreciation, because the rupee has hit its record low, there are going to be severe implications. implications on the entire economy, like implications on the government, implications on the companies, implications on the households also. So if we talk about the implications over here, what is going to happen in the economy? Let me start with imports. Now, when there is a depreciation of rupee, what do you think happens to the imports? Imports become cheaper or imports become expensive? So the imports over here become expensive. How? Now think of a scenario over here. Earlier, I had to buy a pen, okay, and that pen used to cost me $1, and $1 was 80 rupees. So in order to buy a pen, I would have given 80 rupees and I would have gotten that pen. Scenario A. Scenario B, when depreciation of rupee has happened, same $1 is now 90 rupees. The cost of the pen has not changed. Cost of the pen is still $1, but now in order to buy that pen, I will have to give 90 rupees instead of 80 rupees. So my imports have become expensive. Now this is the same thing that India also is facing at the moment. And what does India import a lot? So India imports crude oil a lot. Crude oil and cooking oil. Of course, there are other commodities also, but these are some most prominent commodities that we import. And when the imports become expensive, which means that I am going to give you more money, I'm going to give more money in order to get the same amount of crude oil and the same amount of cooking oil, the prices of these commodities are also going to increase, right? So the prices in the economy are going to increase. These things are going to become expensive for people like you and me. Prices of petrol, diesel, they're going to go up. Prices of cooking oil are going to go up. So overall, there is going to be an increase in the prices in our economy. And this is going to have a consequence on the government also and on the households also. So if I talk about the government over here, when the imports become expensive, the current account deficit of the government will increase or decrease? Increase. The current account deficit also for the government increases because the imports are now becoming more expensive. The government has to give in more rupees in order to get the same commodity, in order to buy the same commodity. And if it is not able to compensate that with the exports over here, then naturally the current account deficit is going to increase. So the government also has an implication here. And if I talk about citizens, ordinary citizens like you and me, we are also going to face something, that is inflation. I just told you the prices are going to go up. Prices are going to increase. Prices of our regular commodities, our essential commodities are going to increase. So inflation is going to happen. And when the prices increase for a very long time, when they persist for a very long time, it gives rise to long-term inflation or persistent inflation, because that inflation is continuing for a long period of time. And when the prices of things have increased in any country's economy, when the goods have become more expensive in any country, what is going to happen? The cost of living in that country is going to increase, because all these commodities have now become more expensive. Cost of living has increased because there is a persistent inflation. And something happens to your savings also. What happens to the value of your savings? The value of your savings will increase or decrease when there is inflation. So the value of your savings is going to decrease. Your savings are going to lose their value if inflation persists for a very long time. Let's say today I own 100 rupees. I have saved 100 rupees. 100 rupees can buy me a lot of things. But if inflation continues for a very long time, 10 years down the line, that same 100 rupees saving will not have the same purchasing power capacity. Now 100 rupees will not be able to buy me as many things as I could have bought earlier. So the purchasing power here has decreased. And that is why my savings also are going to lose value in the long run. So this has a consequence on the government also. It has a consequence on ordinary citizens also. And then it also has a consequence on the companies also, because the hedging cost also increases. Now, what is this hedging cost? This cost is basically a premium that these companies, these industries, they pay to the banks in order to safeguard themselves from any further rupee volatility. Experts believe that there is going to be a further depreciation of rupee. Now, when there are such anticipations, what happens? Everybody wants to protect themselves from losses. So same is the thing with these companies also. So let's say they enter into an agreement today that 6 months down the line, I am going to buy these dollars at the same conversion rate. Today, if the conversion rate is 90 rupees, I am going to buy dollars 6 months later also at 90 rupees, irrespective of the conversion cost at that time, which means that I am hedging my losses. I am protecting myself from the losses because there are anticipations that there is going to be a further depreciation of rupee. So for that, there is a premium, there is a hedging premium, hedging cost that these companies pay. And the hedging cost also increases if the risk increases. This is more or less like an insurance itself. If the risk is high, the insurance premium is high. If the risk is low, insurance premium is low. Similarly, if there are anticipations of a huge rupee volatility, that there are going to be a lot of changes in rupee's conversion rate, the hedging cost is going to increase. If it is believed that rupee is going to be stable, then the hedging cost is going to decrease. So everybody basically faces consequences of this thing, of a depreciation of rupee. But this actually is a double-edged sword. Somebody faces negative consequences and somebody faces some profits or benefits. So if I talk about the exports over here, so my exporters are going to benefit because exports now are going to have more profit. They will be more beneficial. For example, consider a same scenario. Let's say in scenario 1, I'm exporting something and I'm getting $1 in return. The person is paying me in dollars, I'm going to get that in rupees. So earlier this was 80 rupees. I exported something for $1, I got 80 rupees. Tomorrow, case 2, I export something again for $1. The cost remains the same, but now I am going to get 90 rupees. Now I am at the receiving end. I'm going to get 90 rupees for the same commodity that I have exported, the same amount that I have exported. I am going to get more money in rupees in return. So my profits are going to increase. So exporters benefit whenever there's a depreciation of rupee. Our exports become more and more competitive, and the remittances also become cheaper. So not just the exporters, but the NRIs also benefit from this thing. So when they're sending money home, they can basically send the same money home. They can send more money home without having to spend more dollars. Same scenario, for example, today they sent $1, I got 80 rupees, 80 rupees back home. Tomorrow again they're sending me $1, but now I am getting 90 rupees back home. So the remittances have also become cheaper. These NRIs are able to send in more money to their houses without having to shell in extra dollars. So remittances become cheaper, exports become more beneficial, but imports become more and more expensive. So a lot of things happen, and the economy basically faces a lot of consequences, negative consequences also, positive consequences also. But in the long run, a lot of depreciation of any currency is not a good thing, because it is going to have more negative implications, like current account deficit is going to keep on increasing, inflation is going to persist, and a lot of inflation in the economy is also not a very good thing. It can lead to situations like hyperinflation, etc. So a lot of negative things can happen over here. That is why there is a need to stabilize the currency. There is a need to stabilize this depreciation also. And this is where the RBI can come in. RBI can step in and do some things to stabilize the currency. So it can basically have some direct interventions, and it can also have some indirect interventions. Now, I just told you in the beginning what happened, that the dollar has become scarce in comparison to rupees. That is why it has become more and more expensive. And there is a lot of abundance of rupees but scarcity of dollars. And we know that RBI maintains what? Forex reserves. So it can decide to sell these dollars. When it sells the dollars, dollars again are going to get abundant in the economy, and then a stability can be maintained. So it can sell dollars. This is something that the RBI can do as a direct intervention. Then it can also enter into open market operations to basically suck the liquidity out of the economy. It can suck rupees out of the economy, and that is also one way in which stability can be maintained. You either inject dollars or you either suck the rupee out of that economy. So these are some direct interventions that RBI can follow. Then there are also some indirect interventions. Indirect interventions like the changes in monetary policy. In fact, the monetary policy meeting is due this week, so we'll have to see what happens. If the RBI decides to increase the repo rates, decrease the repo rates, or keep it unchanged, we do not know. But there are ways in which the RBI can intervene and change some things to stabilize the rupee. For example, if the RBI decides to increase the repo rates, if the repo rates are increased, all the other interest rates in the country also indirectly are increased, which means that our bonds are going to become more attractive. Government bonds are going to give more returns, because the interest that the government will now offer in its bond is also going to increase. If the repo rate is increased, the government also increases its interest rates, and then investors are going to get more attractive returns. The bond yield is going to increase, and the ultimate problem that we saw over here, the core problem that we saw behind this depreciation, was that these people, these investors, they are sucking out their money. They're pulling out their dollars from our economy because they're not feeling confident. They're getting better returns elsewhere. So if we start giving them better returns, they are going to feel more confident and they're going to invest their dollars in our economy. So the core problem can be solved over here. Again, that can have different implications, but this is also one of the ways that RBI can use, one of the indirect ways in which RBI can stabilize the currency. We do not know what's going to happen at the moment. We'll have to wait for the meeting to take place, and then we'll see what happens to the repo rates. But for now, it was important for us to analyze the complete situation, to understand the causes and the implications it is going to have on everyone. I hope you were able to understand everything that we discussed over here. Please go back and revise this topic from the static portions. Now, let us look at a practice question for prelims. With reference to the factors influencing the value of the Indian rupee, consider the following statements. 1. When the rupee depreciates against the US dollars, India's imports generally become more expensive. 2. A sharp withdrawal of foreign portfolio investment can weaken the rupee by increasing the demand for dollars in the domestic market. 3. Rising hedging costs indicate increased currency volatility, which can potentially raise inflationary pressures in the economy. 4. RBI can stabilize the rupee only by raising the repo rate and cannot intervene directly in the foreign exchange market. Which of the statements given above is or are correct? A. 1 and 2 only, B. 2 and 3 only, C. 2, 3 and 4 only, or D. 1, 2 and 3 only. Please provide your answers in the comments section, and we will meet in a new video. Thank you for watching.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.